The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And we, our whole thrust really is to make sure that you're the smartest taxpayers in the United States, and that's our goal, is to make sure if anything's changing, we want to make sure you know it. And if there's anything that you should be aware of, we want to make sure that you are plugged in. And today is a great show because we not only going to talk taxes, we're going to talk about how to save a bundle on your property taxes. We have a great guest that is going to be part of our show. But in the meantime, before we announce our guest, and I will tell you, those of you that are paying property taxes that are high, or you think that they're high, you want to pay attention to today's show. But in the meantime, I have Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Yeah, well, hey, I hope everybody has a great
Labor Day
too. Right.
Yeah, thank you.
This is the last hurrah before
laborers.
You know what? Right?
Yes.
And Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. Okay, well, so last week we kind of didn't finish up. I had a couple of people said to me, I don't think you finished up about the Roths, who should get a Roth IRA and who shouldn't. But I just wanted to clarify that if, with the large standard deduction that we have, and especially it's larger if you're over the age of 65, if you have no pension plan that's been provided for you and you had pretty much put in your own pension plan over the years, because when you start to withdraw from your IRA, and actually they're talking right now about maybe not doing RMDs. I told you about that yesterday, right, Chris?
Yep.
So, so if you're giving up the Roth, if you're putting money into a Roth, and let's say you funded $300,000 over your life, and you're getting Social Security of $40,000, you and your spouse, and you're withdrawing some of your money from your pension plan, maybe $10,000. You're not going to pay any taxes on that when you withdraw it, because your standard deduction is so high, but the problem is you gave up $45,000 in tax benefits over the years.
Right.
That's right.
So that's really important. Now, the only time a Roth really should appeal to you is if you have a very high taxable pension or you have very high other sources of income. But let's go to somebody that has a $40,000 taxable pension and Social Security of $40,000. They would pay taxes when they retire of $3,000. Okay, and so over a number of years they would save $3,000. But what they gave up was tax benefits if they had put money of $1 million into a pension plan. They're going to give up tax benefits of $250,000. So it takes 83 years to break even.
Well, don't do that.
The bottom line is, before you assume that a Roth is the best for you, give EG Tax a call so we can work the numbers out.
That's right. Gosh, I mean, there's so many people.
Really, what you're saying is, I don't want to pay taxes at the end. Well, at the end, you may not pay taxes anyway.
And
I'm giving up the tax benefit up front.
I got to tell you, Esther, last year there were two clients. They were younger people, and they made like $25,000, $30,000 a year. And at their job, part of their pension plan, an option was putting money into a Roth. And so they, out of their paycheck every week, were contributing money to a Roth. And so that cut them off from the retirement credit. Excuse me, they still got the retirement credit.
So what you're saying is, no, I want to pay the taxes now because if I make it to retirement, because you have to make sure you're going to live that long, then I'm going to save money. But the truth is, the standard deduction is so high that you're not going to pay taxes on it anyway.
That's right.
So, and quite quite frankly, like last week's show, we talked about in 17 years, Social Security is bankrupt. And unless they work a miracle in 17 years, many people that are 50 now, when they're 67, there's not going to be anything to go to the well about. So we wanted to talk about that. The other thing is clarification this week came out is that in order for you to qualify for head of the household and for you to qualify for the family credits, the same statutes that were in place prior to the change in the tax law is still in place for you to have a qualifying individual, right?
Right. That means
so. Why don't you explain that, Chris?
Yep. Just going to say that means the income test is $4,150. So that's your adjusted gross income. So if you're trying to claim a 27-year-old who's still in school and they make $6,000, but you're paying all their support, you can't claim them because they're over the $4,150.
Right. So those same statutes that were in place before the change in the tax law are still going to be in place without the benefit of getting the personal exemption.
Correct.
Right?
Yep.
Okay. Just wanted to, and then the other thing is, if you contribute to the New York State Charitable Trust and you receive a credit, which that's what they're planning on doing, and that would be for education and health, because guess what? They don't have the money to pay for it. You could not get that full deduction on the federal. You have to reduce it by the credit that you got.
Correct.
Right?
Yep.
Okay. So, drum roll, please. Oh, by the way, if you guys don't know what to get me, Riviera Theater tickets to hear that guy that sings like Andrea Bocelli would be a very nice gift. Because I love Andrea Bocelli.
Yeah.
He sounds like him, right?
I don't know who you're talking about, but I'll say yes.
Well, they had a commercial before the show got on. All right. The other thing is, next week we're going to talk about kids in college, because as the kids go back to college, mom and dad can shoot themselves in the foot if they don't take the college credit properly. There's the American Opportunity Tax Credit, which can be up to $2,900 on the federal and state, and the Lifetime Learning Credit, which can be $2,000 on the federal. So there's a lot of things we want to talk about that, and we want to talk about how to use the 529 plans to your best advantage.
Correct.
Right?
Yep. And then don't forget our tax classes are starting soon, mid-October.
How do people register, Tiffany?
Hi. What'd you say?
How do they register?
People register?
You go to our website, egtax.com, or call 632-7886, and we'll mail or email you a registration form. So go click egtax.com.
All right. I'm Esther Goulias, the tax lady, 803-0930, 803-0930, star 930 on the cell. It wouldn't be a party without you, but I want to introduce our special guest right now. For those of you that say, I don't pay large income taxes, but I do pay a lot of property taxes. We are in the land of taxes here in New York State. We have a special guest, and his name is Don Griebner, and he is the principal at RPS, which is Real Property Services, LLC, and pretty much Don is the guru of how to reduce your property taxes that you pay, correct?
Thank you, Esther. It's a pleasure to be here, and what a nice introduction. So, yes, I really appreciate that. And that's what I do. I'm a real estate appraiser, have been for 34 years, and my expertise and my focus in my business practice is to make sure that my clients are not paying excessive property taxes. And I do it on a risk-free basis, so I only charge if I'm successful. So people come to me and say, Don, am I paying too much in taxes? And I say, well, let's take a look. It's really based on the value of your property, so let's look at that.
So that is so great. So what we're going to do is we're going to take a short break, and we're going to be back with your questions. Now, can you imagine you looking at your property tax bill and saying, boy, I really think we're paying a lot? Now is your opportunity. We have the guru of how to reduce your property taxes here in studio, Don Griebner. His phone number is 634-8977, and his website is loweryourpropertytaxes.com. We're going to take a short break, 803-0930, 803-0930, star 930 on your cell phone, and we'll be back with Don on the other side.
Hey now, you're an all-star. Get your game on, go play. Hey now,
Hey, this is is Esther Gullius, the tax lady, and we not only have tax experts we can help you with your income tax and your state taxes and your estate taxes and your fiduciary taxes, but we have Don Griebner here, who is the principal for RPS, was Real Estate Property Services LLC. Lower your tax, your property taxes.com. And Don, we're just thankful that you would join us on a Saturday on a Labor Day weekend.
Well, thank you, Esther.
So did you just wake up one day and say, I think I'm going to help people save property taxes?
Well, I always had that as part of my business practice, but I formalized it about 22 years ago. I've been an appraiser for 34 years, but 22 years ago, the town of Amherst asked me to sit on the assessment review board because they were doing a revaluation of the entire town and they knew there would be multiple grievances to review. So for 3 days, I sat on the board and listened to residential, commercial, industrial complaints and grievances and realized that people really needed help going through the process because they were providing really wrong presentations and weren't successful at all. And I said, not only do I need to help them, but I need to do it on a risk-free basis. So I formed Real Property Services, and I represent property owners in assessment appeals for all property types, and I only charge, if I'm successful, 50% of the first year's property tax savings.
Well, I will tell you, you helped us out, and I'm going to tell you, this is how we got to know Don is because we were involved in a situation where there was a property assessment that we said, oh, well, we can't do this if this is what the property is going to be. And Don really stepped up to the plate and did a great job. So I can tell you myself that Don does a great job.
Well, thank you, Esther. I appreciate it. And this happened to be a situation where you had a property under contract, and most people think, well, that's pretty straightforward. They don't realize the assessor's first question is always, well, how could we be so far off in our assessment? And I had to explain to the assessor, who was wonderful to work with, that I felt the property had aged beyond what the assessor understood. I felt the property was misclassified. It was classified as a professional office, and it really should be general office, and that changed the whole modeling system of value. I provided the assessor with comparable sales of similar buildings, showing the assessor the per square foot value was in line, and I also showed her comparable assessments of other similar buildings that would also be in line if this change were to be made. And after contemplation, she got back to us and said, you're right, I agree, and she gave us exactly what we asked for. But
well, we love her and we love you. I'm going to tell you.
Thank you.
Because really that made the difference between us being able to move forward on a deal and not, because it was just absurd, in my opinion, the taxes that were being charged on this particular property. And you just did a great job. And I will tell you, if you're sitting home wondering about what Don can do for you, you can give us a call at 803-0930, 803-0930, star 930 on a cell phone, and we're going to kind of pick Don's brain here as we go forward. But we do have a caller that's been holding. Hey, Tiff, you want to see who's on the phone?
That's Joe. Hey, Joe, nice to talk to you.
Yeah, it's me, Joe.
Hey, Joe.
Hey, how you doing? I like your show.
Well, thank you.
I really got a question for your guest, too, about property taxes and as far as things go. I'm up in East Aurora. The taxes are high, but it's kind of crazy where I live because there's houses that pay big money and there's houses that don't. I'm not in the subdivision area. But question I had was, I retired from a state job. I work for a contractor now, Esther. Okay, and I use some of my tools as far as working for him. Okay. Now, another thing is, if I buy more tools, is that something that I can deduct?
Okay, so you are now a self-employed gentleman. You get a 1099, right? Or do you get a W-2?
I get a regular W-2.
Okay, Chris, give him the bad news.
I could give him the news. The news is, under the tax reform, no longer sad. Can you deduct job expenses or tools or union dues or licensure fees or continuing education? So the answer is, you could have last year, but you can't in 2018.
However, there is a solution. Okay. If your employer is somebody that can understand that here you are, you're an employee, putting out your money for tools, et cetera, travel, da-da-da-da-da. If your employer would then reimburse you dollar for dollar for the expenses that you incurred, you give him the bills, and he writes you a check for that reimbursement. Then, if he would reduce your wages by that reimbursement amount, the total amount of money that you receive is the same. But the bottom line is what's taxable is less that reimbursement. You follow what I'm saying?
Yeah, I follow what you're saying, but I'll have to run it by this guy. But
so let's say, for instance, that you have expenses of $10,000. All right. So he then writes you, Joe, a check for $10,000. On the other side is let's say you were making $100,000. Now he pays you $90,000. You save the FICA on $10,000, and you save the taxes on $10,000. So it's a gigantic savings to you. And really, that's what's going to happen after this first year, when all of the smoke and mirrors are gone, and people realize that there are people that are in your situation, Joe, that aren't going to be able to deduct those expenses. I think employers are going to step up to the plate and do this for their employees.
And also, for the employer, they also save on the Social Security and
That's
Medicare
right.
tax. They save on disability and on workman's comp insurance. That they're saving across the board too. So it's a win-win.
So the bottom line, if your employer is listening, then this is what we'd suggest you. Call EG Tax will help you to come up with what's called an accountable plan, and then you adjust your wages by the reimbursement from your accountable plan. It saves you FICA, it saves you your income taxes, and your employer still gets to take the same deduction that they had originally, less the FICA that they don't have to pay.
yeah.
I mean, it's really a win-win. But this first year, it's such a learning curve that nobody really knows yet. And unfortunately, I don't think the heads up is going to happen until after tax time next year. But you tell your employer if he needs help, we're here.
Okay.
Okay, Joe?
Yeah. How about a question for your tax?
Yes. Oh, my gosh. We're done.
Okay. So, sir, I appreciate what you do there, and like I said, the area I live in is kind of a different kind of area because there's estate houses, there's regular houses, there's a little bit of everything.
Sure.
Say you live in an area where normally next door to you was a residential home, okay?
Right.
And now there's somebody running a business out of that home. They rezoned it. Well, the zoning wasn't clear where I live anyways.
Right.
Anyways, they got this business running there. Okay. So the assessment of like her property, if her property was to change because she's running a business out of there, what does that affect me? What would your opinion of that?
Well, my opinion is, first of all, Joe, her assessment has nothing to do with your assessment, so we can leave that out of the equation. But what she's doing there absolutely affects the value of your home because you now have a commercial influence directly next to a residential property. Now, I don't know how difficult it is to be the neighbor of this commercial property. Some are worse than others, but it has to be factored into the locational adjustment when you're valuing your home. So clearly you have a situation that 95, 99% of the other homes in East Aurora don't have. You're next to a commercial property and you should be treated accordingly. Now, what is the impact on value? That's very subjective, but believe me, there is an impact on value. We just don't know how much until you look into it closer. But I definitely believe any assessor would recognize that and would listen to arguments in your favor.
Okay. Now, how do I contact you, sir?
Okay, I'll give you my phone number. It's 634
634
8977.
8977.
Right, that'd be great. And I look forward to helping you. And your timing is right because the grievance process starts just after the first of the year, so we'd have time to prepare and meet with the assessor real early in the process.
I know that this is something different, but one of my clients, his neighbor has an Airbnb, and so the neighbor, the client, the neighbor, he can't stand the Airbnb next door. He's like, oh yeah. And I know that's probably a horse of a different color, but neighbors.
But
are
obviously,
funny like this.
in Joe's situation, I mean, a real commercial property is definitely an impact on the property next door. I would think, right, Don?
Absolutely, there's no question, and the fact that it's permanent too. Some influences can come and go, but this is clearly a permanent influence and should be accounted for.
But
So if you're somebody that's been complaining about your property taxes, now's the chance to talk to Don Griebner from Real Property Services. He can give you an insight about what he can do, and I'm going to testify. He really helped us
thank you.
because we were between a rock and a hard place, and Don stepped up, and I will tell you, he's a wonderful, ethical guy and very professional. And now's your chance. 8030930, 8030930, star 930 on your cell phone to talk to Don directly. We have on line 2, Barb. Hey, Barb, how can we help you? We got a quick question to get in.
Can you hear me?
We
Yes.
can.
Okay, hi. First-time caller, long-time listener. This is
Thank you.
Titzler, North Tonawanda. Love the show.
Thank you.
Yeah, my question's for Don. Is that Don with an A or with an O?
That would be an O, Barb.
Okay. Thank you, Don. My question, Joe kind of stole it, to be honest. But I got these chickens next door to me, Don.
Yeah.
I think that they're lowering my value of my property.
And some of the towns now allow chickens in residential areas with permits, but usually they ask the neighbors if they mind, and they get consent from all the neighbors first. But again, if you went to sell your house, who's ever going to buy it is going to see that influence, so it has to be taken into account. There's no question about it. As different a question as that is, it's still a factor. Thank you.
Well, they're nice people, so thank you, Don. Again, your phone number for me, please.
634-8977.
And again, it's loweryourpropertytaxes.com, which is kind of very much self-explanatory. I will tell you, if you're somebody that's questioned your property taxes, this is your opportunity to talk to Don after the news break. 8030930, 8030930, star 930 on your cell phone. I'm Esther Golias, the tax lady. Hey, I'm Esther Golias, the tax lady from EG Tax, and I will tell you, normally we talk about income taxes, but we're talking about real estate taxes, which are, really, really expensive in New York State because we live in New York State, and we are so thankful to have Don Griebner here from Real Property Services and loweryourpropertytaxes.com. And I will tell you, if you're somebody that has questioned in the past about your property taxes or how you are assessed or how they come up with this is a great time to give them a call. And if you have any other tax questions, 8030930, 8030930, star 930 on a cell phone. Yeah, Chris.
I was just going to say, when we hear reassessments and talking about property taxes, people just think residential. As we've said earlier throughout the show, it's commercial, it's industrial, and it's special use property. So it's not just your home. If you own any type of property that you pay property taxes on, Don, can probably help you.
That's true.
That's true,
Okay,
Chris.
so
I do
about
kind of
the new
specialize in
assessment?
commercial properties, because that's my background. I have an MBA in finance, so I've always been a commercial appraiser, but now I specialize in all property tax assessments.
So Don, how about all the new assessments that are coming out? How concerned should people be about that?
And that's an interesting word you use, Esther, concern, because when they hear revaluation or reassessment of the entire town, which Amherst did last year, Clarence did this year, and the city of Buffalo is now rescheduled for next year, people get up in arms, they get nervous, and they shouldn't. In my opinion, the best thing a town or city could do is a revaluation of the entire municipality, because their assessments get stale. We all know what property values are doing now, and we need to stay up to date and current and fair and equitable. And people say, well, it's a money grab. These municipalities are just raising our assessments to get more money. So I asked this question to groups for years. I've asked this question. If we happen to be sitting right now in the town of Amherst, if the town of Amherst doubled every assessment right now in the town, how much more revenue would the town and the school district and the county collect?
I fell for it. I fell
Tiffany
for
did.
it.
She put her arms way far wide apart and said that they're going to collect so much more. The answer is they will collect no more dollars in revenue, zero. And people say, it doesn't compute. I don't understand. And the reason is that the budgets are set by the taxing authorities. There's a levy that's part of the budget, and the levy is what's going to be collected based on property taxes. So the school has their levy and the town and the county, but that amount is fixed, and then it's going to be divided by the total assessment of the town. So if the town of Amherst doubled their assessment, the tax rate would be cut in half, and everyone would pay the exact same amount.
Okay.
Now some people say, well, my assessment went up and my taxes
went
up.
All I can tell you,
Okay.
I write out these great big checks to pay for
Sure.
Amherst and West Seneca and Tonawanda, and so if the assessment drops, then you're saying that's what the millage is based upon, right?
It's correct, but I use the example if everyone were dropped the same amount or raised the same amount. That's not what happens in a revaluation. A revaluation is supposed to bring all properties to a current market value, and we know that properties appreciate at different levels, and some are newer, some are older, and a reassessment will bring everyone current. So typically, after a reassessment, 1/3 of the property owners will pay more, 1/3 will stay the same, and 1/3 will come down.
Okay.
But people need to be prepared for a reassessment. They look at usually the wrong arguments. They talk about their taxes when they should really be talking about the value of their property. I ask people this question all the time when I speak to groups. How many here, and I ask them to raise their hand, how many here would sell their home right now for what it's assessed for? And rarely, if ever, do I get nobody,
would,
of course. Because they say, well, that's not the point. I'm still paying too much in taxes. Well, let me tell you what the law is in New York State. It's ad valorem, meaning based on value. And the value of your home is supposed to be what you're assessed for. And for 99% of us, we're assessed below what we feel we could sell it for.
Okay. So who is it that should really be a bell or a whistle should go off? Like, for instance, we have a property in West Seneca, and we pay more in property taxes for our West Seneca office than we do for our Amherst office, and I think our Amherst office is worth more.
And that's probably true, Esther. And
so when I'm writing out these checks, I'm thinking, gosh, I know I couldn't get this much. I couldn't get that much more from my West Seneca location than my Amherst location.
Well, there's two different issues here.
So
One
I guess
is the
I'm
value.
hiring you for another office.
Okay, well, we'll take a look at it. And that's what I say to people. If you're unsure, call me. We can talk through it. We can do our analysis. And if I can't help you, you won't pay a dime. But I always help my clients. I always say there's only two answers I can give you. One is you're fairly assessed. You're fine. You're not paying too much in taxes. The other is I think you're overassessed, and I can take you through the process and help you.
And then, Don, what did you start to say? There were two issues with...
Yes, with your property in West Seneca and Amherst. One issue is market value and comparing it to your assessments. The other issue is the tax rates. Now, in some towns, because there's not as much new construction in addition to the assessment base, the tax rates climb pretty high. So you're probably not talking apples and apples when you talk the tax rate in West Seneca per thousand versus the tax rate in Amherst, depending on the school districts and all that. But our process of assessment reduction has to start with market value. I always say taxes are a red flag. So when you look at your tax bill, if you're not happy with that number, or if you're not sure if it's the right number, that's when you call and we look at the value of your home, comparable sales, comparable assessments. Is this a fair assessment? And we go through the process.
I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930. We are lucky enough to have Don Griebner in studio. He is an expert at how to make sure that the property taxes you're paying is fair. And if you have a question, 8030930, 8030930, star 930 on the cell phone.
Sorry.
Yeah, go ahead, Chris.
I have a question for Don. I know on break we were talking about the city of Buffalo, that they're going through major to try to catch up because they're behind. So if the city of Buffalo assesses or raises people's assessments, we'll say by 40 or 50,000, City of Buffalo is not going to get any more money. It's just the houses are being.
That's correct. In fact, it costs municipalities, Chris, to do these reassessments. That's why they can't do it as often maybe as they should or would like to, because it's such an expenditure. They do not make money. And then keep in mind, not only do they hire firms to help them do this massive project, they have to hire attorneys usually to end up defending court cases and spend extra time with staff meeting with the public. So it's a huge expenditure, a huge undertaking, but it's very, very valuable to bring assessments up to date.
So I guess I'm not getting it then. So why would they reassess you at all if they have a certain fixed budget amount and that's it? I
Well,
mean,
they have a responsibility to property owners to assess them fairly. And we're not only talking about fair relative to market value, we're talking about fair relative to their neighbors and other people with similar types of properties. There's an equity that should go along with the reassessment that makes it fair. And they want a fair and level playing field, and they want it as close to market value as they can. It's the right thing to do, and they should do it more often, quite frankly.
Would it help them when they go to sell the property that the assessment's up higher? Will it?
That's a great question, Chris, and realtors ask me that all the time. My opinion is when you're looking to buy a house, I never pay attention to the assessed value in order to derive an opinion of value. When you understand how an assessment is derived, it's a big modeling system. It's what I call the macro view. They've never been inside your home. They don't know your finishes, condition, amenities. So don't rely on assessed value. Obviously, here's something, I'm glad you brought this up, Chris. The biggest thing that's missed by purchasers of homes, or any property for that matter, is that you should have an expectation going in that your assessment at some point in the future is going to be raised to your purchase price.
Yep.
People should not be surprised by this. Now, they have this argument, well, there's a welcome stranger law and they can't just pick on me and reassess me. Well, some towns can, or in time they will reassess you to purchase price. You really don't have much of an argument.
We have a text caller. It says, we'll be paying more to the state. Duh. We don't want that. So I think they're talking about the assessment. And so how would you
pay more to
will
the
be
in
paying?
other words, if there's a reassessment and the taxes go up, is it something that the state is going to grab, but not the municipality?
No. We're paying three districts when we pay our property taxes. We're paying the school district, the town, or city, maybe a village as well, and then the county. So that's what property taxes are.
Not New York State.
No, New York State. I mean, there might be, again, that's the part of the process that becomes irrelevant and it muddies the waters. The relevant issue here is, what is the value of my property compared to the assessed value of my property? And am I therefore paying too much in taxes? What happens to those taxes, where they go, that's irrelevant to me. I'm an appraiser. I try and protect my clients so they're not paying too much.
No,
That's good.
I don't know if this is a wives' tale or not. I've heard, like, people, and I've seen it too, where people do an addition on their house, but they don't put up the one side of siding because
That's right. People will say that all the time, right?
because
Chris?
if it's not done, the town can't come in and reassess me.
Again, those
And
are
it's
things.
just stupid, right?
Well, there's strategies that people try to employ, and the assessor has one role: to look at the property in whatever condition it's in and give their best estimate of its market value. So if they see partially unfinished, then they'll assess it accordingly. All I'll tell my clients is that when I represent you, there is full disclosure. If you have a finished basement that the town doesn't know about, they will when I'm done. So you have to make that choice whether I'm coming in or not.
Okay. I'm Esther Golias, the tax lady from EG Tax. We have Don Griebner from Real Property Services, LLC. LowerYourPropertyTaxes.com is his website. His phone number, 634-8977. And a question I have for you, Don, is how about seniors? Do they have do they get a special assessment? I mean, do the towns reduce their assessment because of their age?
Very good question. Do they reduce their assessments? No. Assessed values in New York State are based on market value. So whether you're a senior, whether you have children in school, doesn't matter your age, you will be assessed based on the market value of your property. Now, there are senior exemptions, and if you qualify based on your age, based on your income, if you're a veteran, those are exemptions that will reduce your tax liability on your bill, but it doesn't reduce the assessed value of your property.
Okay, so the exemptions reduce the bill, but
Correct.
not the
assessment
the
itself.
assessment.
And what's really interesting to note, and I'm glad you brought this up, Esther, is if you buy a home, let's say in June, and March was the filing deadline for an exemption, and you bought it from a veteran, and you get the benefit of their exemption that they had filed for the rest of the year, obviously next year you won't get it. But you'll also get added to your bill the amount of benefit you received from that veteran exemption during the portion of the year you were in there. So you'll be actually paying that back. Now, it doesn't apply to the STAR program, but other exemptions, you'll be reimbursing the second year you're in the home.
Okay, I'm Esther Gullius, the tax lady from EG Tax. We have Don Griebner here from Real Property Services. If you have a question regarding your assessment on your home, reassessment on your home, if you are thinking that, gee, I look at this tax bill and when, I'm having dinner with my friends, they say their taxes are $3,000, and I'm thinking my home is the same home. Why do I pay $5,000? This is a great time to call and get some free information. 8030930, 8030930, star 930 on your cell phone. We're going to take a short break, and we'll be back with your calls on the other side. Hey, I'm Esther Gullius, the tax lady from EG Tax, and our goal is to make sure that you're the smartest taxpayers in the entire world, whether it's income tax, state of New York, federal taxes, and property taxes. And so we're so thankful that Don Griebner from Real Property Services are here, and he's talking about property taxes. And if you have any questions, you can give us a call in studio, 8030930, 8030930. But people have been waiting. Let's go to Mary in Hamburg. Hey, Mary.
Hi, everybody. I'm calling about my taxes. I live in the town, not in the village. And it was always kind of my understanding that the village taxes were higher than town taxes.
And that's usually true. There's another level there of services provided and taxes imposed, so that's true.
Mm-hmm. But yet I look on the internet, for houses that are for sale, and it shows what the taxes are, and it's just kind of like constantly lower than mine. And when you talk about the assessed value versus the full market value, I know my full market value is about double my assessed, but I actually paid about $25,000 less for the house than what they've got the full market value listed at.
Okay, well, you're in a town that has an equalization rate that's not 100%. So let's say it's 50%. Then whatever your assessment is, they're saying the full value is twice that. And that should be on your tax bill. You should see both your assessed value and full market value. The only number we care about is full market value. So, Mary, if you've recently paid less than the full market value on your house, you clearly have a case. Now, unless you've done things to the house since you bought it, but whatever your current value is, and we're already going to be going into 2019 before we can challenge this again. Mm-hmm. So the question is, if you went to sell your house in early 2019, could you sell it for the full assessed value?
And maybe I could, because property values have gone up, per se, in the real estate world.
Yeah.
But I guess I just don't know if I have a case or.
Well, how long ago did you buy the house?
Actually, about 3 years ago.
Well, I would guess then, and this is obviously purely a guess, but within 3 years, you've probably appreciated to the point where the assessment on the house now is in line with what you could sell it for. That's what I would think. Mm-hmm. But that's always something we can look at. If we look at it in the spring of 2019, look at the most recent sales in the marketplace, the further out you are from your purchase, the less your purchase price really becomes effective in the formula. So we can look at it in early 2019 and see if we can help you.
Okay.
So Don, let me ask you this: if my neighbor who has the same house is paying taxes less than me, does that mean I should be upset?
Well, so many people get sidetracked with that. And here's what I'll say, Esther. Unless you want to go in and blow your neighbor in and say it should be assessed higher, the only thing we should really pay attention to is our own home, our own assessment, and our own value. So
yeah, but it makes me feel so much better to complain.
I know, exactly. I hear that all the time.
That sounds like people who come into our offices and say, but the person I work with makes just as much money as me, has the same amount of kids, and they get back $10,000 more than us.
Right, that's true. That's
Exactly.
true. All right, let's go to line 2, and we'll talk to John. Hey, John.
Hi, yes. It's more of a comment. I've been looking in different states now to actually move out of New York State, And I've noticed that some of the different counties across the country are starting to go to more of a flat rate tax, where they're just doing like they're doing away with property taxes and doing more of a residential tax or a homeowner tax, where they're just charging like $1,000 or $500 for everybody, no matter what the value of their house is. And I was just wondering, actually, what you thought of that. And
That's a good question.
Well, I really haven't pondered that, to be honest, but I think a fair system is based on your ability to pay, and that's the best they can come up with is therefore the value of the property that you own. I don't see how the New York State machine, which needs so much to operate, in the school districts that we have, which are just top-notch, to charge everyone the same exact amount, to me, would be pretty difficult for those of less means to keep up with those that can afford a lot more. So I'm not saying I think the system's perfect, but I understand where they're coming from.
That would be like a flat tax or
Right.
something.
But
Yeah.
again, a lot of these towns have so much different millage rates, right? Like, where is the lowest millage in all of Western New York?
Well, the lowest millage usually means the highest assessment and the least spending. So tax rates are very favorable, for instance, in Clarence.
Okay.
Very high-end community. They don't have their own police force. They might not have the same infrastructure requirements because they don't have as much sewer by design. And so their tax rate is relatively low. When you talked earlier about West Seneca, but again, as towns reassess, their tax rate per thousand comes down. And
Right.
that's another strong benefit of doing a reassessment.
Okay. All right. Let's go to line 3. And this is somebody from Clarence. Hey,
There you
how
go.
can we help you?
Yes, good afternoon to everyone. My question is for Mr. Griebner. I'd like to know what role he can or does play regarding new build properties. And is there a difference in the assessment with regards to a new build and an established home? I would just like to hear what you have to say about it.
Oh, that's very interesting. And there's really two scenarios of new construction. One is where there's a contract price with a builder where the assessor becomes fully informed of not only the base price but any extras. There's a real bone of contention between assessors and builders about this. But in that case, the assessor will typically rely on a contract price. Where there is no contract price, or if people build their own homes, the assessor will go on the most current sales of newly constructed homes on a per square foot basis and do the best they can by modeling it. All assessments really today come out of a modeling system. So depending on the builder and the level of finishes and obviously the square footage and yard size and bedroom bathroom count and if the basement's finished, all these things factor into the model. But if the assessor doesn't have a number, they have a pretty good understanding of the range of value for new construction in your neighborhood, and that's what they have to go on. But again, and they're working a little bit in the dark, so that's where you can come in and maybe correct some of their errors and get the assessment lowered.
And so that's a great point that they're working a little in the dark because only you know your specifics.
Exactly right, Esther.
And so, I mean, it's just like that property that, we were looking to buy. And, when they told me what the property taxes were, I thought, oh, my
Well,
gosh.
I always say that my biggest role is to educate the assessor, and that's in a nice
Right.
way.
And
It's
so what you're doing is
non-confrontational.
you're revealing to the assessor, because it's probably a lot like doing taxes. Your Social Security number, the things come in, the W-2s, it spits it out, and they don't know anything unless you let them know. And
Or
that's
when
where-
when we're handling an audit with somebody,
Right. That's exactly right.
No, a previous caller said with new builds. I got a question for a new build. I understand when you build in a subdivision, you're buying the land, the house all together. But say you buy a land on a country road. You buy that 2 years ago. So you're getting taxed on a vacant land.
Right.
Now you build your house. How long before the town comes in and says, oh, there's a house here now?
Well, it's interesting. In the towns in Erie County, taxable status date is March 1st. So they will take a look and see what is there as of March 1st, and that is what should be assessed for the year. If it's under partial construction, you'll get a partial assessment. If it's fully completed, you'll get a full assessment.
Okay.
Okay. All right, let's go to line 1. Hey.
They just wanted the phone number they have
Oh, okay,
of
great.
Don.
All right,
One of the things I
what
always say
is
to
the
folks is...
what's the timing for grievances
Okay,
right now?
good question, Esther. Thank you. The formal grievance day in the towns in Erie County is in May. Usually it's the fourth Tuesday, but some towns are a little different because assessors share towns now. The city of Buffalo, you file your grievance in the month of December, and then you'll have a hearing sometime in January, February. So December 31st is the deadline for the city of Buffalo. In May,
it's not a slam dunk. I mean, you go in, you file your grievance. Hopefully, they're using a professional. I mean, because obviously a professional like you lay it all out for them. I mean, they actually are responsive to what you say, because I can attest to that.
Well, the biggest piece of advice I'd give property owners is start the process early. I know I said May is the deadline. We can start in January and February, and assessors appreciate that because I can call them early. We can have informal discussions. They can even inspect the property if we need them to, but there's no time pressure. They're not as inundated with the grievances. So start early, and we can be effective.
And I can tell you, Don, so many of my clients, they scream and yell about their property taxes going up. And before, I didn't have an outlet. I didn't have anybody except I thought they had to fight it on their own. And so I'm glad that I have a name to toss in there.
Thank you, Tiffany.
So
I appreciate that.
No, it's true. And I will tell you, to really piggyback on what Tiffany was saying, Don did a great job. I mean, he went down and he got all the comps and he talked directly. And the wonderful thing is, when you're a professional such as Don, and you go in and you talk to the assessor, and you're not saying, boy, you are a dumb person, boy, look at what you did. I mean, you're saying, gee, you didn't know this situation changed. Here's the changes. Here's the facts. Here's, I mean, that's really what you want to do. It's
exactly,
like people
Esther.
say to me when they're dealing with the Internal Revenue, they'll say, I'll make them come down and prove it. I'm sorry. They don't come down and prove it. You have to prove it to them.
When you think about the properties that the assessors are responsible for, tens of thousands of properties, so they can't pay nearly as much attention to a property as we can. And that's where they appreciate us coming in and educating them with pictures and descriptions and information that they otherwise wouldn't have.
There's another text caller, and all it says in capital letters is "excellent show," which I think
great. Well, we really
nice
do
to hear.
appreciate it, because I will tell you that's part of what we want to do when it's not tax time, tax season. We try to get everybody educated, and I will tell you, Don has been great. For us, we highly recommend him. Real Property Services, loweryourpropertytaxes.com. Who would not like that web address?
Thank you, Esther, so much.
And his phone number is 634-8977. Until next week, if you're getting them love letters from the IRS, State of New York, you can give us a call at 632-7886. Visit us online at egtax.com. And until next week, I'm Esther Golias with Christopher Fabian, Tiffany Fabian, and our special guest, Don Griebner. And Don, thanks for coming.
You're welcome. Thank you, Esther.
Bye.